The rapid evolution of the Internet of Things, IoT, has led to a hyper-connected world where billions of devices communicate across diverse and often unsecured environments. While this brings transformative benefits to sectors like healthcare, smart cities, and industrial automation, it also introduces unprecedented security, privacy, and trust challenges. And on demystification of blockchain technology, as our very first subject matter this evening, we will be hosting the founder, Beacon Smith Collective, community lead, Citria, Nigeria. If I have gotten any of this wrong, Engineer Ndiokwelu Nzube will put me right. Nice to have you on the show, sir.
Good evening. Thank you very much. You didn't get anyone wrong. You got it right.
You're welcome. Question.
Okay, we're talking about blockchain technology. For most of us that don't have an idea of what this is, can you just give us a background detail of what blockchain technology is?
Okay, so blockchain technology is like a digital ledger. So in simple terms, just kind of like imagine your Excel sheets and a digital secure form of your Excel sheet that someone can't actually alter or tamper. So like that's the simplistic way of like looking at a blockchain is a digital database.
Oh, interesting.
Looking at blockchain technology, which is often considered or perceived as complex, what are some effective strategies to be adopted? I mean, for someone like you, not new in it, how can someone actually, simplify all of the principles involved for a non-technical audience without losing their sense of its mechanism?
Okay, so basically the first thing you do is you help them see everyday applications of blockchains. And everyday application could just simply be something that has to do with, let's use, for example, health records. Okay. So in Nigeria right now, we have our health data, which you actually go to each and every hospital and you have a folder. So let's assume you want to imagine a world where you walk into any hospital and after taking your, checkup with the medical personnel there, they record your medical history, and this medical history is going to be recorded on a database which, if you go to another hospital in another country, you can securely access that same database. That's just like a layman's term of helping you understand what a blockchain can help you do without getting to the technical or making it complex.
Okay, at the first, when you started talking first, you said that it's like, having your own spreadsheets and nobody can tamper with it. It's just you. So how is blockchain used to improve supply chain transparency and traceability?
Okay, so the first thing that blockchain does in supply chains is provenance. And provenance simply means source. So in supply chain and logistics, the first thing that you actually are always going to be confronted is, where does this product come from? So for example, let's say agriculture. So in agriculture, you are much more concerned about where your farm produce is coming from, where the suppliers, the chemicals that were used to treat it. So with the blockchain, you can actually have that immutably stored on the ledger. So that way, it's the biggest unlock, or the thing you get by introducing blockchain in supply chains, is provenance. That's the key thing you unlock from there. So you can easily always identify that this product is from this product, and then like you don't have any faults in your supply chain.
You actually said, and I think you're right about it, given various reactions and explanations on what blockchain is, that it has potential across various industries and sectors. But can we have real-time application of blockchain technology where it has been implemented in such a way that genuine problems are solved?
Yes, there are so many instances where you can actually have real-time, applications of blockchain. You have blockchain in gaming. So people actually play games, and games actually have a low latency speed because people are actually playing online, so you need it to actually have a fast response time. And you also have it in price oracles. Price oracles are like commodity feeds. Like let's say you're trying to get aggregate prices of, let's say, commodities. You want to know the price of rice, the price of beans, and then this is being done in a decentralized way. So you have price oracles which actually work on blockchain, and these are real-time applications.
So in what ways can blockchain revolutionize digital identity and data transparency?
Good. So if we use an example, let's dive deep. I would like to always use a specific example in Nigeria. So let's say elections. We have issues around, let's say, digital identity and fraudulent voters and
Exactly.
yeah. So
With the
you could
beavers.
yes, thank you very much. So you could actually have a system where you actually securely store the information of a voter, and that is stored on the blockchain, and that's a simple application of decentralized identity protocol, where you can actually help mitigate election fraud and identity theft.
I understand that when we're talking about blockchain technology can also be applied in banking. And something came to mind. That is something that has been very popular, especially among young people and tech persons. Why are you smiling? You have a clue to what I want to talk about?
Nah, it's the most common application of blockchain.
Oh, tell me about it.
In financial sector,
Okay.
people are much more used to the financial applications of blockchain and the financial aspect of
Like
blockchain.
everyday use?
Yeah, I mean, most often in the way we interact and engage with blockchain, people are almost always speculating around the price and not on the technology itself. And our discussion this evening has not really revolved around the financial aspect of blockchains. I mean, you talked about supply chains, you talked about identity management, and then also real-time applications of blockchains. These are not speculative aspects of blockchain. We are talking about, other applications of it. So you were heading to the speculative,
part.
the speculative part, which gets everybody interested.
That's about the only interesting thing to most people, right?
Not exactly most people,
No,
but majority.
well, wait, not people like you. I'm talking about the rest of us.
Yeah,
The rest
majority
of
are
us.
always interested in actually securing, they see it as a store of value and means for them to actually make investments and protect their hard-earned work. So there are different applications of blockchains in financial management.
How about cryptocurrency?
Well, cryptocurrency, it's the same as, it's like products that are built on blockchains. So it's like the name that you give to your product. So let's say a product is built on a blockchain, and then that product actually has a token involved in it. So that token and the product as a unit is now what you have as like the cryptocurrency. So you have Bitcoin, you have Ethereum, and then these are like the popular cryptocurrencies that you have. But there's still the Bitcoin technology, which is still separated from Bitcoin as a financial asset.
Interesting.
Yeah.
So what role does blockchain play in decentralized finance, DeFi, and what are the risks that is associated with it?
Okay, so blockchain introduced the concept of decentralized finance, where you actually can securely and trustlessly access financial primitives, such as access to loans, access to yield, that's investing your funds into something that could actually give you returns. And this operates outside of regulated bodies, like the SEC has to regulate investments in Nigeria. So being decentralized means that there's no central organization that's placed. It's just governed by smart contract and logic.
So what of the risk attached to this, since it's decentralized rather?
Beautiful. So when it comes to security and blockchains, this is something that is very, very important, and it's something that I always encourage people to take it personal, read up on it, and then do your research on it. Now, there are different levels and different trade-offs you have in blockchain. So some blockchains have some trade-offs around scalability, decentralization, and security. And some actually have more of security and decentralization, but are not that scalable. So each blockchain has different trade-offs that they come with. So whatever blockchain that you're transacting on, you have to know the trade-offs. So for example, the most secure and the first cryptocurrency that we still know and still have today is still Bitcoin. It has never been hacked, so it's the most secure form of money. And yeah, that's what we always advise people to actually always adopt.
Governments around the world somehow make efforts to regulate blockchain and cryptocurrencies. I don't know if there are potential impacts of these regulations on innovation, particularly in emerging markets. Is it going to restrict anything, or cause a revolution, sort of?
I feel like regulation it's not something that has limits the sector. It provides guidance to industry players on what the government of the day wants.
I'm sure you remember in the recent part that the federal government of Nigeria tried to do something on cryptocurrency, for instance.
Yeah, they tried to do the e-naira, and I feel like recently there's a consortium, a private-led consortium that developed a stable coin back to the naira, which is known as CNGN. And this was a public-private sector partnership between the government and the private sector.
And it's not affecting.
No, this is actually regulated by the government. It was developed in conjunction with the public sector. So this is something that a kind of like product you can get by having private sector people working hand in hand with the government and the regulatory services in the country. And there are times where you could actually say that some governments all over the world tend to overreach. And but as time evolves and the industry has matured, a lot of governments are now embracing and actually looking forward to adopting blockchain in their own internal processes and systems in one way or the other.
Interesting. You talked about the election part of it. How can blockchain actually help regulate the voting system in order to avoid it being rigged?
Well, first things first, you have to take a look at the process of elections. So to avoid rigging in the elections, you are either trying to stop it at the voting points, or you're trying to stop it at the collation points. So if you're looking at the voting points, you're probably going to be concerned around identity theft. And these are the solutions that you're going to try and integrate around voting, the voting pool. So the voting booths. So you're more interested in developing a system or a solution that helps verify each and every voter as being a unique voter, and that this person isn't coming back with a repeat voter card. So this is something you can get at the point of voting. Then at the collating point, you're actually going to try and have a system that verifies that this vote is this vote, and this vote belongs to this unique voter. So this is like, different ways you approach it. So it's not like a one-size-fits-all kind of approach. There are different ways you can actually seek to integrate blockchain technology in the electoral process. So there are so many ways you can articulate, but we can actually move on a step-by-step iteration, which now leads to incremental progress.
Blockchain is often hailed as, because of its security features. We hear about hackings, but then it looks like the tech guys are always on top of the game, and nothing has gone wrong recently, to the best of my knowledge. But smart contracts are always vulnerable. It looks like something is going to get wrong, and over time, actually something gets wrong. But I don't know how these things work out. But are there strategies that developers will look to or will try to adopt to ensure robust security without making the user feel complex about blockchain technology?
Okay, so the first thing we do is we try to sensitize and educate people on these technologies and the right way to adopt these technologies. So first of all, I always say the one cryptocurrency that has never been hacked, or the blockchain that has never had a security failure till date, is the Bitcoin blockchain. So if you take a look at the Bitcoin blockchain, you first of all start from there. That's your North Star. So for people developing on the blockchain, I personally lead a community that builds on blockchain. So we are known as like Bitcoin builders. So you can actually have your protocol built on this technology. So the smart contracts, which actually are had these vulnerabilities, now have mechanisms where you can now have that smart contract secured by Bitcoin, not by another blockchain, but you can now have it secured by Bitcoin by having it use Bitcoin as its own data availability layer, and then you can now merge the flexibility that comes with smart contracts, which is the Ethereum virtual machine. And then when you merge it with the security of Bitcoin, you have a stronger product. So with this strong product now, you're going to encourage anybody trying to adopt a blockchain solution to go for the right product. Because in the world of blockchain, there are many innovations, there are many trade-offs. Like I said, the blockchain's trade-off between security, decentralization, and scalability. So these are the three trade-offs you tend to have. So if you're looking for security, you go towards the blockchains that are actually most secure, and the most secure blockchain is Bitcoin. So we always encourage people to build on Bitcoin because it's the most secure cryptocurrency, it's the most secure blockchain technology, and it's been around from day one. It's the first cryptocurrency, if you could use that term. So if people are actually looking to build, we always encourage people to build with the right platforms, and also understand the different trade-offs that you can get while building on other platforms. So sensitization plays a huge role.
Are you saying that there have not been crashes? No, when you mentioned Bitcoin, it's trying to, jig my brain to think about crashes.
It has never been hacked.
It has never been hacked.
Yes.
Okay. Let's talk about the future of the blockchain technology. Given that there's rapid evolution of technology in general, and in particular blockchain technology, in your own opinion, what do you think is the most significant or advancements in the horizon that could fundamentally change how blockchain technology will pan out, say in a decade or so, the future?
Okay, so if you take a look at the current landscape right now, it feels like as if the reason why we have people in the blockchain is because there's need for a decentralized way of contributing resources and have people build on the most important technology that exists on the earth right now. But as technology evolves and we advance into the fourth industrial revolution, where you now have IoT, Internet of Things, and you have smart devices, and you have blockchain, and you have AI, you now start seeing blockchain as some sort of rails for building on different solutions. So you have AI agents that are able to actually communicate trustlessly through the means of blockchains. So one of the huge challenges that we have in AI is that nobody really knows what it's actually really doing. So for you to actually know what it's actually really doing and the amount of tokens which the AI agents actually spend to actually execute a task, these are some of the things you're going to expect to be taken over by the blockchain. So when the AI models are deployed, they're probably going to be deployed on blockchains. And if they're performing tasks or transactions, these are actually going to be done on the different blockchains. So right now, you get a sense that blockchain is being tested out with incentives, which are financial incentives. And tomorrow, you're probably going to have it secure much more important things, like you could have them secure our homes. Yes, you could actually have smart sensors and smart cameras inside your home, and this could easily be hacked. And when these are integrated with blockchain rails, you could actually have secure line of communications within your homes. And like I said, the AI agents are the most promising things that I know are going to be deployed in years to come on the blockchains. Because if you actually utilize any AI model right now, let's say ChatGPT, Claude, or Google Gemini, you're going to realize that they use tokens to actually respond to you. So you can actually, the number of words that the response the AI, the models give to you, each word is known as a token. Now, contrast that to what you have in the blockchain, you have a token. And the difference is that the tokens, we call them cryptocurrencies. So with a different application, those tokens could actually represent something else for a different application. So the AI agents, for us to know what they are doing, if they're deployed on those blockchains, you know that this is what the command that was given to this AI, and the AI performed exactly according to the command. Because more often than not, when you ask the researchers and the people developing these models, how does it do what it does? Nobody really knows. So that's actually something to expect in the future with respect to blockchain technology. Yeah.
So what exactly are the scalability challenges facing blockchain?
Okay, so let me use the example that I always use because I build on Bitcoin, so I always revert back to Bitcoin. So Bitcoin was built to be fully decentralized. It was built to be very secure, but it wasn't built to be very scalable. Now, meaning that you couldn't have a whole lot more of applications built on Bitcoin. So what you don't have is, to extend the scalability feature of this Bitcoin, you now have to develop new solutions which are known as rollups, which are then deployed on Bitcoin, which then allow more users interact and actually perform transactions on this blockchain without actually clogging the blockchain. Because when the blockchains get clogged, the gas fees gets very high, and then users can't actually transact on these networks. And a whole lot of people know the challenges of transacting on Bitcoin and the gas fees, and then Ethereum and the gas fees. And that led to different other blockchain solutions like Solana and rollups, which actually have cheaper gas fees. So these solutions are actually built with different trade-offs, like I said earlier. So you either building to this direction and then trying to fix the problems that you have on the other side, or you are building with this in mind. So let's say you're trying to build a blockchain which could actually secure, let's say, a social messaging platform. You want it to be much more closer to real time. You want it to actually be very secure, but you might not fully want it to be decentralized. So let's say something like WhatsApp. WhatsApp is controlled by a centralized authority, but each time you log onto your WhatsApp, you are told this chat is end-to-end encrypted.
Yes.
But there's no way for you to prove that, right?
True.
You just simply trust that it is end-to-end encrypted.
Okay.
Yeah, but you can actually scan the codes
The
that you're
QR
giving,
code.
but can you actually verify? You see, that's what blockchain gives you: trust, but verify. So as long as you can't verify on such a system, these are where you now tend to say, okay, is this truly secure as they say? And then you want it scalable to contain as much as 1 billion users, actually sending messages rapidly and every single time. So that's something that you want near instant finality from that blockchain. So when designing a blockchain that is going to be used for a platform like, let's say, WhatsApp, you have different trust assumptions and you have different assumptions to make for such a platform. And if you are designing a solution which is meant for a financial solution, like you said, decentralized finance, you're probably going to be interested in another trust assumption. So you're going to be leaning more to security and decentralization. And then you want to actually have it scalable to have more users adopting the chain and institutional adoption. There's institutions actually building on it.
Decentralization is coming up again. And so given the decentralization nature of the blockchain technology, how much transparency is expected in the transactions?
When it comes to the blockchain, every single thing is transparent. Now, you can actually have privacy-focused solutions, but by default, you have transparent transactions. Many people assume that the blockchain is encrypted and anonymous, so what you do there is censored. No, it isn't. What you do there can easily be seen by anybody that takes a look at the blockchain. So that's when I say you can trust, but you can still verify. So anything that anybody is doing on the blockchain can easily be verified, you know.
So cases where people talk about losing their money in this whole process, you know, maybe sending cryptocurrency to a different person, and people get scammed on this same platform. So how is it possible that you say that things can be traced, and then people they find it really difficult to trace back their money?
Okay, so that it can be traced doesn't mean that it can actually say that this is this, because these are actually anonymous systems. So you actually have a user on one side and you have another user on one
the other
side.
side.
Thank you very much. So when you perform a transaction from point A to point B, I can see that the transaction went from point A to point B, but I don't know who point B is, and I might not also know who point A is.
So they're anonymous.
Yeah, so you can actually have something that's closer to being anonymous, but that doesn't mean that it is actually censored. So you can actually know that this transaction went on between this party and this party, but you don't actually know who this party is, you know, unless the person gives up their identity, and then from there you start having clues. So in a situation where someone actually loses their money, it depends on what platform that they lost their money on. If it's on a centralized exchange, they can actually get help, you know, by reporting to the centralized authority that this is the challenge that they have. But if it was a decentralized exchange, you're on your own. So basically, in the blockchain, the first thing you're always told is to make sure that you are actually understand fully the implications of transacting on this plane, because you are in charge of your keys. So if it's not your keys, it's not your coins. But if you're the one in charge of your own wallet, then that means you're like the responsibility falls on you. So you're the custodian of your own wealth.
On the flip side, Engineer Nzube, for all of its complexity, blockchain technology has the potential of the centralization we have talked about, and the recording is almost without limit. You actually said that. And so all we have had all evening is the positive side of blockchain technology, the pros. We have heard of all of the benefits. Are you saying that there is no cons?
There are. I actually believe I mentioned one right now when I just talked about.
I think that was what triggered
because you could actually simply lose your money, and by losing your keys. So when you're signing up to a blockchain wallet, you're probably going to be given something that is known as a seed phrase, and this seed phrase you're going to be encouraged to protect and keep it safe. Now, if you lose this, you're probably going to join the millions of others that have lost access to billions of dollars, you know. So there are millions of users that have lost access to their coins, and these are worth a whole lot. And then also, thanks to the anonymous nature of these blockchains, a whole lot of fraud takes place on them, because people actually have limited knowledge on this platform. So when you're not really sure of what you're transacting on, and then you assume that the trust assumptions that works in the real world would be applicable in the same scenario, where let's assume that you go to your bank and there's a bank failure, you can actually report to NDIC, and there's a party for you to lay complaints to.
That's an insurance outfit. Okay?
Yeah, so in the blockchain, you are in charge of your own, you're the custodian of your own assets.
Risk and
Yes,
all.
so you have to actually, you're the one managing the risks yourself. So the risks are actually much more higher when transacting on the blockchain. So that's the reason why people are always encouraged to be well knowledgeable about this, because it's a risky asset class. You know, so most times people are always advised, don't get involved in the speculative aspect of this technology. Learn the positive aspects, and then there are so many other things that are done on these technologies. You know, there are creators, there are writers, there are storytellers. You know, there are different, even decentralized science. You know, so there are so many things that are going on in the blockchain. So the science is being decentralized. You know, you have creativity, intellectual property, a whole lot of things are actually being done in a decentralized nature. So there's some positives to it, there's some negatives to it. But from the beginning, the risks were well known. And if we take a look at the positives or the benefits or which this innovation has brought to the world, we would find reason to say, yeah, okay, this is worth it, and it's going to be a huge part of our future. And I see a future where the blockchain gets abstracted away in a way that just like you have the different equipments have transistors and resistors inside them, and we don't care what is inside them anymore, that's when we're going to have tomorrow, perhaps the robots are going to be running on blockchain technologies. So we wouldn't really care what blockchain is running on. We just simply know that this blockchain, this robot, is blocking in blockchain, and that someone can't remotely hack this robot to actually control the robot to behave against their wishes. Because, I mean, you can't imagine a human having to resist a humanoid robot. You know, if it's being hacked and even if it's trashing its hands around, it could lead to a trauma to you. So we want to make sure that we build systems that are durable, robust, and trustless.
Okay. So what exactly are the key differences between public, private, and consortium blockchain?
Good. So there are different types of blockchains that you can actually have, and the blockchains that you have depend on the type of centralization that you tend to have on them. So private blockchains are more blockchains that are used by internal companies. So I'm aware that IBM has the Watson blockchain, which is an internal blockchain developed by IBM. And I feel there's another one which they developed to be used for supply chains. I believe it's Watson. Watson was developed for supply chain management. And then you have public-private blockchains, which are something like, I think, MasterCard. Yeah, MasterCard currently just, I think 2 days ago, released the news that they were going to integrate stable coins into their credit cards. So that way you can actually spend your crypto from your wallet with your credit cards. So that is kind of like a development which they first iterated with a public-private blockchain. I think something Ledger, Hyperledger. I think Hyperledger is an example of public-private blockchain. And fully permissioned public blockchains are like Ethereum, which anyone can actually have access to. Is an open source repo. You can actually, take a look at the code, see what it is, and fork it. And when you say fork, and create a clone of that blockchain. So when it comes to the private blockchains, you have no access to it. I don't actually have access to it. It's restricted to an internal organization. And then public-private is like it's half public, it's half private. So there are areas of the blockchain you can't transact. There are restrictions on them. But fully permissioned blockchains mean that you can actually get to interact and build anything you want on top of them.
Interesting.
Another possible drawbacks to blockchain technology could be cost. I don't know if there are some that come free, and those that you have to actually pay for. How much expensive is it? Are they those you have to pay for? Even when it is built to save users money, I guess.
Well, I think this is the question is quite ambiguous. But
really?
but I think if I understand you right, you're talking about the cost of transacting on these blockchains.
That's what I mean.
Beautiful. So recall earlier I said that there are different trade-offs that are made around decentralization, security, and scalability. So there's a blockchain known as Solana. Solana has a very high throughput. Solana is actually very fast, and Solana has very cheap gas fees. So the cheap gas fees on Solana make it attractive to different applications and different use cases. And Ethereum has its own gas fees. Bitcoin has its own gas fees. So to solve the high gas fees that you have on Ethereum, they actually built out the layer 2s, which are known as rollups. So there's layer 2s, there's layer 3s, which extend the functionalities of the layer 1, which is actually the monolithic blockchains. Sorry, I hope I'm not getting too technical.
You are.
We're trying to demystify. Anywhere we'll let you know.
So that's okay. So coming back to the gas costs, like I said, you have to make the different trade-offs and choose where you wish to transact on. So for example, if I'm trying to choose an asset class where I'm much more focused on the security of the blockchain, I'm going to choose Bitcoin, but Bitcoin might have expensive or high gas fees. Now, in recent time, the product which I represent, which is Citria, Citria is now building a product which is going to allow you have very low gas fees on Bitcoin and brings the functionality of EVM also to Bitcoin. So this is something that you're now going to now take a look and say, if you're now transacting on Bitcoin, you're going to have low gas fees. Thank you very much. So there are different trade-offs. So you must know where you are trying to transact on and the different reasons why you want to actually transact and deploy there, because it's really very important. So what someone like me does is to educate the public to ensure that they know the different trade-offs that exist here. And when you now become very adept, for different reasons, you really want to transact on different chains. And it could be costly here, but you might have something that you want to do on this chain and the cost isn't an issue for you. Yeah.
Because of the way blockchain is built, the network is expected to protect users from hacks and preserve privacy. That's what he told us. Won't it be an opening for illegality?
Yeah, it has actually been abused in many ways previously. And this is why I say regulation is something that shouldn't always be seen as an attack to the industry. So regulation brings clearer guidance to operators in the sector, because without regulation, you're probably going to experience, just like you said, illegal activities and all sort of things. So regulation actually ensures that the bad actors also know that there is a penalty for this sort of behavior and this type of activities.
Could that perhaps be the reason for the public perception of blockchain and cryptocurrencies in particular, as people still feel uneasy using this technology?
Currently, in 2025, I really do not believe people still feel uneasy using blockchains anymore. There's a huge adoption, there's a huge awareness around what it portrays, unlike you may have in 2016, 2017. And the industry has matured. And it's a day at a time. You know, the country is vast. We have a huge population. It still beckons on the players in the industry to ensure that every nook and cranny is educated and sensitized properly and even onboarded into the right ecosystems. Because with the wrong platforms bringing you into this technology, you may actually get it disillusioned or introduced to the wrong projects, where let's assume it is tied to the token price performing well, and when it's no longer performing well, everybody's going to feel a sense of disillusionment around what they're trying to build. So I always encourage people to, like I say, I always encourage people to get properly educated first before
diving into
yes, before diving in, because you don't just want to get yourself, you know, looking confused in somewhere like that. Yeah.
Engineer Nzube, as we begin to wind down this conversation, blockchain, cryptocurrency, the likes have become somewhat buzzword in the tongue of every investor, especially tech investors. We have many practical applications of the technology that we're talking about already been implemented and explored. And so, like you said, quite a number of persons are no longer having a sense of unease while dealing with this, or when you mention it. So it's looking like blockchain is finally making a name for itself, or not. The bottom line is what I want to hear as we conclude.
Blockchain is going to be an everyday part of our life going forward. It's going to be integrated in ways we don't actually even understand. And just like the same way in the 90s, where we encountered different protocols which came in different names also, but the end product of those different iterations was what we knew as the World Wide Web, which, you know, evolved into the internet. But before then, you had it developed as individual protocols. You had the TCP/IP, you had the networking layer, you had the application layers, and then it all gradually evolved and came out as the World Wide Web, which it was part of like the hallmark of the third industrial revolution, because this actually united the entire world and increased productivity in the world, being the internet. So blockchain is something that is going to actually plug into the existing devices that we have and then be like an upgrade to what we've already had and enable us actually create new innovative solutions which may have been limited by the previous technology that existed. So I always tell people, first of all, try and decouple cryptocurrencies from blockchain. These are two different concepts. Yeah. The same way in technology, there's Web 2, there's Web 3. Web 2 deals with a different standard, Web 3 deals with a different standard. So when you're talking about blockchain, you are actually specifically referring to the distributed digital ledger. And when you're talking about cryptocurrencies, you're talking about the financial aspects or the financialized part.
Mixing.
Exactly.
Thank you very much.
I always thought
blockchain
was a platform for trading cryptocurrencies.
No, not exactly.
Exactly.
Yeah, so most times that's why I always say it's good to be properly sensitized on these terminologies. Come in as a beginner, and then over time you become an intermediate, and then over time we expect that the person that was trained could also now train the other
someone
people.
else.
Yes.
All right. As a knowledgeable person in this system, do you think that blockchain, which it's been proliferated as we speak, and the tokenization of assets would become problematic in the future?
This is quite subjective. I would share my own opinion around this because we're entering a frontier where you can actually get to tokenize a whole lot of things. You can tokenize real estate, you can tokenize commodities, you can actually tokenize down to art. So I feel like what we're doing is we're trying to bridge the gap between the digital world and the physical world. So we've been able to tokenize money. That's something that you already do, but you don't see it in that means. I mean, think about it. Up to 2002, you had to only deal with physical cash. Then at some point, we introduced the automated teller machines, and then we introduced the credit cards into our society, and then we brought in the digital apps. And then we felt like we couldn't go cashless, and then somehow we're already getting used to the cashless. We're already even begging.
We are already
yeah, we're begging to now move very cashless. So that's the same way you can actually still take a look at tokenizing different assets. It's going to happen a day and at a time, and then all of a sudden, all at a time. So that's what we're going to expect.
To a large extent, I think we have demystified this technology. Don't you think, Quincy?
I agree with you.
I'm sure one thing or two that is new would have been let out there to our global viewer. And we've been talking with engineer Ndiokwelu Nzube, founder, Beacon Smith Collective, and community lead, Citria, Nigeria. Thanks for coming, sir.
Thank you very much.
After the break, we shall return to have a second subject matter discussed on the evening show. Stay with us.
Signature TV, news in your pocket.